Yo, what's going on everyone? Welcome to another lesson. Today's lesson is going to be on scalping with institutional smart money trading. So I've been having this request for so long. People have been spamming me, asking me, oh, track effects, like, how do you scalp with smart money and stuff. Like, it's crazy to think that you guys really don't know this. And I'm not trying to be rude or anything. Don't take it the wrong way, but it's right in front of your face. The problem with the forex community is that too many people are making it seem like everything's hidden. In reality, it isn't. Everything I do on the higher time frames, every single thing you do on the higher time frames, such as marking up liquidity, marking up your major moves up, your institutional market structure, you do the same exact thing but on the lower time frames. That's how you trade the smaller time frames. Because think about it, all you're doing is trading candle to candle on the higher time frames, correct? So what's the difference between the smaller time frames and the higher time frames? All it is the higher time frame is more of a bigger picture thing, and the smaller time frame is more of a smaller picture thing. So you have to remember that smart money trading scalping is the exact same way the way you would trade the higher time frames. But I'll show you guys how I would trade smart money. So this is obviously a hindsight example, but I'll show you guys a live one as well. So it's all in market structure. That's the truth. It's literally just all in market structure. We can see that the market is overall moving pretty bullish, right? At this point, we see that price did give us a break of structure right here. Not a break of structure, but rather a continuation of structure. We have a high point right here, or technically our high point would be right over here. But we have a high point right over here, and then price action ends up breaking above it, making a new high. Once we did break that new high, what did I say? Well, I said find that major expansion move up that was responsible for that creation of that break of structure of the high. Now, one thing that I can see is that we have liquidity over here, right? Now, the liquidity already tells us that price is going to have to make a run below here. So now we know why we want to be focusing on this level or this level, specifically because this is just manipulation. Like we said in the institutional market cycle video, this is all just consolidation and manipulation. Market structure is creating liquidity of the highs and the lows, but we still have the money of the lows to take out. So where does price go? It falls back down into that original expansion move up that was responsible for price continue going higher. Now, we also have a institutional candle right at the open of that major expansion move up, and that's where price action ends up. Sorry, if I go, I think it was a 5 minute I should have marked it up on. Yeah, the 5 minute. So the 5 minute wise, we have that institutional candle, and then price ends up retesting that original area of where price first expanded, and then we end up putting our stop loss at the low with a TP at the next high right over here for 17 pips and a 3 pip stop loss, which is really decent if you think about it. Now, right over here, we see price is bullish, but we have that break of structure. We have this little high, higher low, higher high trend going on. And remember, we're on the smaller time frame, so we're trying to identify the micro structure rather than macro, sorry. So we have a break of structure of the lows where the market gave us that break of structure, but we can't fully just take a reversal scalp because we see a break of structure. We need more micro time frame structure switching to bearish before we take that sell. So what we have to do is wait. So at this point, we're not doing anything. We're simply waiting for more bearish structure to form in, and then we don't see much, and then boom, look at this. Price ends up making a newer high. It ends up breaking this previous high right over here, right? But it's still consolidating. So that doesn't necessarily mean that we're bullish now, but we're still consolidating. But price ends up creating a newer high, which means that we would be wrong if we did end up selling over here, and unless we did set our take profit there. But most likely people wouldn't. So what I'm saying is, before you do take a sell on the smaller time frames or the higher or the buy on the smaller time frame, you have to make sure that the structure is there as well, even though if it's the 1 minute or the 1 second, it doesn't matter. But right over here, let's play this out. We don't see much structure happening, but then boom, price created this low, high, higher low, higher high. Now we end up breaking structure once again. Now this is a proper break of structure because now we did consolidate, and what did we create? Well, we were technically just creating a bunch of liquidity of all this area over here, and price broke below it to take out that liquidity, and we had that break of structure. So at this point, where are we going to focus? Well, let's look at the 3 minute time frame. Let's try to find an institutional candle that was responsible for that. And in this case, our institutional candle would be right over here. This last bullish candle before the move down. And if we check the 5 minute time frame, you can even use a bigger zone just like this. So technically our area of focus is now over here because this move down broke structure. So what we would do is we would set our limit right away, right here, with a stop loss at the high for about 6 pips. and then TP could either go to the low right here. Now this is a small one-to-one trade, but remember, you're going for 17 pips and you're risking only 9 pips. You're not going for these crazy, 19 to 1s. You're scalping. So you can't have the idea that you want to catch 30 to 1s when you're scalping, because that's not realistic. I know MentFX does it and all these other traders do it, but you have to understand the way they trade is really stressful. They use Wyckoff, which is, on the 1 second time frame is insane. It's hard to use that, right? They use all these different tools, and it's just really confusing. My idea is sticking to what's easier. Now you could refine this onto the 3 minute just update here if you did want to do that, and that way you are minimizing your risk by a lot. But let's see what price does. Price taps you in perfectly to the 3 minute institutional candle. Let's go back to the 5 minute and let's see what price does. And then price smacks your take profit right away. Price hits your TP, and now at this point you just took 21 pips with a 5 pip stop loss, which is really good. Now someone might be saying, okay, wait, I want to catch the move back up now. But at this point, you can't take the buy right away because you still need to see that bullish structure form in. So we're not looking to buy right away. And right now, there you go. You've seen price broke structure once again of the low over here and the low over here, which does indicate that overall the market does want to go lower now. So this is where you can use the higher time frames to get a general idea of where price is going to be going. So let's use the 4-hour time frame to see where we want to see price going. And one thing that I could see is that there's imbalance right over here from this point to this point. So we know that the market's going to have to fill in that imbalance, right? So technically speaking, if I go back to my 5 minute time frame, I can look for re-entries for my my scalp trade and let's see if we can find any. At this point, we don't see nothing interesting. We don't see really nothing interesting, but boom, price break structure of this high. Now, technically speaking, someone might say, okay, now I know that I could take a buy now, right? Because the price broke structure. All this break of structure is telling us is the market is going back up to do what? To retest into another institutional candle. Let's see where price ends up going. It goes perfectly right over here to this institutional candle, and then the market ends up continue its move down to the bearishness. Now, if you did target up to here, that would have been a really nice 50 pip TP, but remember, we're scalping. So let's go back to the 15 minute and see what the market does, right? Let the market do its thing, and let's go back right over here. Go to the 5 minute time frame. Let's go to the 3 minute, and boom. So price is overall consolidating now, right? What does this consolidation tell us? This tells us either price is generating liquidity of the highs and then the lows to later take it out. So obviously we want to see the market go higher. So what do? Well, we can go to the 1 minute. I don't think it could let me go to the 1 minute right now, but if it did, we would be looking for breaks of structure in this down move right here. Now if we did get that break of structure, this move up broke a ton of structure of this little small down move, what we would do is we would set a limit at this last institutional down candle before the move up with the stop loss at the low, and TP just the next high, which would be right over here, this previous little I guess you could say support, and we just target there. And as you can see, one candle automatically just smacks our TP, and then price reverses. Now it snaps back into where? Into this last institutional down candle, up candle before the move down that broke what? More structure right over here. So what are we going to do now? Well, obviously we're going to be having our interest in this institutional candle right here, and that's where we could have taken a really nice easy scalp with a stop loss at the high. As you can see, TP or your entry would have been to the pip, and just target the next low, which would be a nice 17 to 1, and then price ends up completely smacking your TP. And then let's see what the market does now. So it comes into this area, right? We don't have much sorry, we go back up here. So it comes into this area, and like I said, if you do see a break of structure, that doesn't necessarily mean you need to take a buy right away. You have to wait for that structure to form. We do have that break of structure of the previous lower low, lower high, lower low, but the market hasn't continued bullish. It didn't do that, so we don't take the buy. We need more confirmation. At this point, the market is still moving pretty bearish, so we don't really have any confirmations for why we want to take a buy. But let's just wait and try to see why we should take a buy. So we do have that break of structure now right over here, but do we have bullish structure forming? Not quite yet. So at this point, we're waiting. We're waiting for an opportunity. Now we can kind of see some bullish structure forming in the market, right? We have this low, we have this high, we have this higher low, we have this higher high, right? So we have this low high, higher low, little structure forming in the market. Now if we look at the 3 minute from a macro perspective, we can still see that price is overall still moving bearish. This is kind of just like a little area of manipulation. So what we could technically do is take this little institutional candle right here and take that scalp all the way back down to where our original expansion what happened. So entry would be right over here. Let me just alter that a little bit. Entry right over here, stop loss at the high, and then TP just the next low for 20 pips. And let's see what the market does. Okay, so you do end up getting stopped out, I guess. Price goes back up to stop you out, and then the market does its thing and goes back down to here. Now, because we did get that break of structure, we would be technically focusing on this area right over here. Remember, like I said, we had that break of structure. Now the market is still moving higher. So when you did take that short, you want to make sure that your TP is somewhere realistic. It's not somewhere where, you know, somewhere random, like all the way down over here. Make sure you're targeting the next low, because you're not in for a long time. You're in for these small little moves. So because this is the original move right over here that broke structure, this move right here is the cause of this break of structure and is the cause of all of this. We would be focusing on the expansion move that was that cause, which would be right over here. And that's why price came back down into tapping us into this area of interest. Stop loss just at the low, TP the next high right over here, or you could target the next high at this institutional candle for 17 pips. Now, we did take that short down, but we did get stopped out at break even because price tapped into our buy limit. Now, let's wait for more confirmation. Now, price is still pretty bearish, right? It's not moving bullish quite yet. It's still extremely bearish, so let's let the market do its thing. And look at this. What is the market doing now? After we had that major BOS, price is coming back up. To do what? Let's look if there's an institutional candle. Price is going back up to test right over here. We have a really big institutional candle right here. If we go to the 14 minute, 13 minute, we can refine this up to here. 13, let's go to the 12 minute, 11 minute. All right, so the 12 minute is refining it up to here. Now I would stick to the 13 minute, but just for the sake of it, boom. Price taps into this institutional candle perfectly to the wick. Stop loss just at the high, and TP at the next low right over here for 28 pips. How did I do that? Well, it's simple. Let's look at structure. Structure, bearish. What's my last institutional up candle before the move down? That was the cause of the break of structure right over here. We have a break of structure right here. And where's my institutional candle? Well, the institutional candle is right over here. Boom. And then price ends up tapping you in one, smacks your TP right over here and does its thing. Now, boom, look at that. Right over here, we have this major move down, quick move down. And remember, you also have to look at the 1 hour time frame as well. You can't just stick to the, you know, smaller time frame. You have to see where price is at. You know, this is where things get a little bit confusing, but you have to see where price is at and where it's going. If price is right over here, and we know that it already kind of cleared up all this imbalance over here, and we still have this institutional candle price has to, you know, mitigate. You still have to keep in mind that price may randomly reverse at any time. So just remember to keep that in mind, right? But we know that, you know, this is obviously hindsight. We know price ends up going back down. But for that case, let's just go back up here. Now on the 5 minute time frame, what do we see? I think we were just over here, yeah. So we seen price break down. Now, like I said, we'd be focusing on that last institutional up candle before the move down. So we'd be focusing at price action coming back into this area, and then we take this a small little short. Now, we still have liquidity of the highs over here. Remember, you have to keep in mind of LQ. Liquidity is everywhere. We have liquidity right over here above the highs. So as this level does look pretty good to take a scalp short, you can see that eventually you do get stopped out. Well, you would have got stopped out by now already, but price has to make a run above that liquidity, and that's what we're waiting for. Play this out really quickly, and boom, look at that. As soon as price ends up taking the liquidity out, right, even though it wasn't as big, but you can see that the market still wicked above to take out that money. Once it took out that money, what did it do? It automatically sold off and broke a ton of structure. So it goes to the 15 minute and find an institutional candle. Right here we have our institutional candle, right over here. And what do we have left? We have a ton of money resting at the lows over here. Liquidity cleared, and then we have imbalance from here to here. We have basically a bunch of reasons for why we want to see price action come back down. Now right over here, price perfectly taps into our area of interest. Stop loss at the high for 6 pips, And TP at this point, we would target this low right over here. Why? Because there's imbalance. We have a ton of imbalance now, which gives us a reason for why we want to see price come back down there. And that's why price ended up dropping a ton right there. Let me quickly take you guys over this one more time. As soon as the market ended up taking the equal highs out over here, price dropped and did what? It broke structure right over here. We have a proper BOS. Sorry, not COS, a BOS. Right, you couldn't even take it up to here, but the market still ended up breaking structure by a little bit from the wick. If you look at the 3-minute time frames, there's even more structure that price ended up breaking out of, which was right over here, right over here. There's a tons and tons of breaks of structure. As soon as we had that break of structure, we basically looked for that institutional up candle before the move down that was responsible for that break of structure, and we simply looked to target, or we simply looked for entries in that level. Price came there perfectly, and our limit gets tapped in, and then the market ends up selling back down. Now, what ended up happening here? Let's look at the 1 hour. Price tapped into our 1 hour point of interest. Now, because this is a higher, 4 hour, because this is a higher time frame, 4 hour order block, this is where you could catch that major move back up. This is where you could catch that major move back up. But let's say, for the sake of the video, you're a scalper and you don't want to do it. That's completely fine. Let's just look at structure wise and see if we can find any viable opportunities. So right over here, I'm not sure if I can go to the 2-minute. Okay, I can. Right over here, we have a break of structure. What are we going to do at this point? Well, we have institutional candle right over here because this is that last institutional down candle before the move up that was responsible for that break of structure. So at this point, we would focus on, so at this point, we were focusing on this level, but the market stops you out. Now, there's going to be times like these that happen a lot. At the end of the day, you just have to, stick to your analysis. Shit's going to happen, whatever. Risk management keeps us in the game long term. Now, we don't have any more confirmations to take a buy quite yet, but we do know that market did break structure. We did see that move up that broke the previous lower highs. If we look back at the 15-minute time frame, we don't really see much institutional candles. Yeah, there isn't much institutional candles for us to work with, but we see another break of structure right here. Price ends up going on to the 3-minute. All right, boom. Price ends up breaking structure right over here. We see this previous lower high that the market created. It broke structure right over there. At this point, we're scalping. We'd be focusing on 2 levels of interest. One being this last institutional up down candle before the move up, and the second one being this last institutional down candle before the move up. And let's see what the market ends up doing. So right here, first off, it taps into our second area of interest, or our first area of interest rather. Stop loss at the low for 2.5 pips. TP could be the next high just for about 8.5 pips. Or you could literally just target the next significant high, which would be right over here. Or just target wherever the imbalance would be, which would be right over here. So you can target that imbalance over here if you wanted to. And let's see what the market does. And TP ends up getting smacked right away. Now remember, this is all happening in a 1 hour point of interest. That is in a buy side example because this is a 4H order block, right? A down candle before the move up. If you do see prices in a higher time frame, bullish order block or bearish order block, if you're scalping, trade with that type of analogy. Because if price, for example, right here, price is in a higher time frame, bearish order block, telling us that price needs to go higher now. If I'm looking for sell side scalps, that does decrease my scalping probability compared to if I was looking for buy side scalps. If I did look for scalps right over here at this institutional candle, I would have got stopped out, right? But that's because price is in a point of interest. In this point right here, price was not in a point of interest. It was doing whatever the fuck it wanted, right? It was random. It was doing anything it wanted. But if it's any specific point of interest, you can't. You legit cannot just take sells because you want to take sells. You have to stick with the trend overall. So this is where price taps into our point of interest right here for a decent 6-to-1, and price ends up, taking off. Now, if you go back to the 15 or the 5-minute, we have another point of interest being right over here, and then we have another point of interest right over here. We'll delete this, delete this. You do take the 15-minute, it would be something like this, but you could definitely refine that down up to this area right here. So see what the market ends up doing. The marketplace do its thing, and okay. So at this point, you wouldn't have gotten triggered in. You would have missed it by like 0.2 pips, but the market did create liquidity right over here, kind of, right? We kind of have liquidity over here that the market created. So there's still a chance that price could come back down to take out those lows, but we don't know that yet, right? But look at this. Remember what I said in the institutional market cycle video. When you have an expansion or an area of interest, for example, this was our expansion, this was our manipulation. Look at the red. This was our manipulation, and then this is our re-expansion back up. What did I say in my institutional market cycle video? I said that if you do have an area of interest in your expansion, but then the market doesn't go down, it creates a newer expansion. You have to change your point of interest to the next expansion. So in this case, it would be right over here. Why do we have to do that? Well, it's because these levels are going to be tapped in later on, long term. We're looking, it's going to get tapped in long term, and that's why we'd be focused on this point of interest now, right over here, because this is that last institutional down candle before that major move up right there that did break and gave us that continuation of proper structure. TP would just be the next high. Market taps in, TP gets smacked, right? Even though this is a 3-to-1, it doesn't matter, because at the end of the day, look at how much we're going for. We're going for 25 pips and risking 8 pips. The risk to reward at this point doesn't matter. And if anyone tells you that they're catching 100 to 1s with scalping, ideas or whatever, they're either lying or they're the best trader in the world. And in my opinion, I don't fuck with that. I don't go for those type of things. Now look at this, exactly like I said. The market is gonna do either two things. It's gonna leave this liquidity to come back later on, and our points of interest are going to be met long term. And look what ended up happening. The market goes down and taps back into our point of interest after taking the liquidity, and we get tapped in, stop loss at the low, TP the next high. 16, that's a 5-to-1, 16 pips. Or you could target the next high. I don't know if it will make it up there, but in this case it didn't. But like I said, we're going for the next highs. We always have to target those next highs. Now let's see what the market did do. We can, let's delete all of this right here. Boom, 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 boom. And boom, we deleted everything, right? Now we're just looking at price action. Let's go back to the 1 hour time frame. Let's see where price is at right now. Price is at a specific point where it's retesting into what? Into a 1 hour point of interest. This 1 hour institutional candle. Now what else did the market leave by? It left by imbalance right over here to pick up later on. So that means that we do have an overall target of why we want to see price go up. Well, let's look at the 5-minute time frame and let's see if we can find any possible tradable opportunities or for buy side scalps. Now right now, do we have a breakup structure? Right over here we kind of do. POS top. This wick did close above it. Now on the 1 minute, the candle would be above it, so I would take it. And we have our institutional candle right over here. So at this point, I would have my limit right over here. Price would trigger us in. Stop loss would be the low, and then we would target the next high over here for a 1-to-1, or we would target the imbalance wherever the imbalance lies. And let's see what the market ends up doing. And boom, take profit, gets smacked, right? So basically it's all with structure. All I'm really doing is I'm just analyzing the micro structure. I'm looking for those proper breaks of structures, and then I'm looking for those retracements back into those institutional candles that were responsible for that break of structure. And that's how you could catch these crazy scalps. Like, we'll delete all this and we'll look at this one right here. Every institutional candle down right over here. Price, what did it do? What did it do over here? Well, we broke structure, right, towards the left. We broke structure towards the left. We had this higher high, higher low moving trend, and the market came down and broke that previous higher low. So that means that as soon as price comes back into that area, you could take that small little scalp, stop loss at the high, TP at the next low. Right? It is risky, so in this case, the market did give you a small intraday move for about 6.5 pips, but then overall it did end up reversing. So I'm not here to show you 100% trades that are going to work, because when you do go to the live charts, you're going to be confused saying track effects lie to you. I'm here to be 100% transparent with you. I'm not going to lie and say, yeah, I never lose, I never, I always win. That's the biggest cap ever. Don't listen to people that tell you that. Just don't listen to that. We have to stick with what's simple and what makes sense. So risk management wise, we lost about 2 trades out of 10 scalps, and even though we did lose those 2 trades, our stop losses were so small. We made our our profit and our losses back that quickly. So at this point, the market reaches a high point, and then the market starts consolidating. See what the market does. At this point, let's see what it does. So boom, market does reach a high point, and we see that the market is slowly consolidating, right? If we go to the 3-minute or the 2-minute even, we can kind of see, okay, so we didn't actually get that break of structure, so we would not have taken that short trade. I thought that these candles closed below here and then we'd, you know, take that scalp trade up there, but in this case we wouldn't because we didn't get that break of structure. So right now I don't see much, so we're not going to do anything. We're simply just waiting for price to do its thing. Now look at this. We have 2 points of interest, one being this one right here and the second one being this one right over here. Why? Because these are my expansion moves that broke structure towards the left, so I would simply just wait for price to come back into there, see what it would do, and perfect. Price created liquidity right over here. Let me just quickly change that. Price created liquidity of the lows. Liquidity cleared. Market takes out the liquidity, taps into our area of interest perfectly to the pip, even though it does go a little bit in drawdown for 12 pips, but then we just target the next high, which would be either over here or you could target the next high over here. Now I'm really conservative with my scalping like targets because I hate scalping. It's not for me, I don't do it, but when I do scalp, I go for 1-to-1s. And let me tell you why. When you're going for these crazy 16-to-1s while you're scalping, 9 out of 10 times price will go your way for a little bit. ICT says this himself. Price will go your way for a little bit and then it will reverse and stop you out. That's what happens over here. Price goes your way for about 30 pips and then reverses and stops you out. You have to be consistent with your profits on scalping. You know, you don't go for crazy little, you know, freaking 500 pip TPs when you're scalping. Just, you know, that doesn't make sense. That's not how scalping works. But yeah, let's delete all this. I'll show you guys a couple more examples and let's see what the market is saying. So right over here, we have this little area where price reacted off of it and then sold off. Now this level already got tested multiple times, so I really wouldn't be looking to sell in this level already over here, because if this was a fresh zone we would, but example right here, but we didn't. So price moves down. Let's look at the 15-minute wise. Let's see what we're saying. Price goes down and gives us a break of structure right over here. BOS down. Gives us that break of structure. Let's look at the 5-minute for institutional candles. We find one right over here. And then we also find one right over here. Right. We have those breaks of structures. At this point, simply wait for price to come back up into our level. Let's skip this on the 15-minute. Okay. So 15-minute wise, we would have got stopped out on both of these, right? But once again, our stop loss is nothing crazy. It's just 2.5 pips, 1.5 pips. That's fine. At the end of the day, whatever, it's fine. So we'll delete all this and then we'll just look at what price did now. Price ends up expanding once again. So we created another area of interest right here and then another area of interest right over here. Price broke structure towards the left right here. So now we'd be focusing on these levels instead. Let's look at what price has to do. Now look at this. We are in a consolidation area. This consolidation area is creating a bunch of liquidity of the lows and liquidity of the highs. We're expecting price to go down to take out those lows and then continue its bullish structure. Now, okay, so this one, price reacts off our intraday zone, moves about 11 to 22 pips and then it ends up reversing and going back down. Now right over here, same thing happens. It reacts a little bit, but then the market ends up the market ends up reversing and going back down. So we're gonna look at the higher time frames a little bit. Let's go to the 1 hour and let's look for scalping opportunities. Right here, we have this nice institutional candle that the market created, and then we also have this really nice institutional candle over here that the market created. These two levels of interest. So, and also these two levels of interest are both responsible for breaking structure towards the left, right? So this increases the probability of price coming back into our zone of interest or reacting off our zone of interest. So we set our limit right there. Stop loss at the low. TP either the next high on the smaller time frame. So let's just target here. But if you're crazy, just target there. But I don't recommend that. Go for, you know, small little 1-to-1s. That way you'll be consistent. Look at that. Quick 20 pips. Go for the next scalp, another 20 pips. That way you're not risking too much. You're not risking, but rather the probability is by your side. But if you don't want to listen to that and you want to do your own thing, then go target the next high. That does work. Well, like, look at that. You see, like, it's so mentally draining. Just being in a trade like that for that long with all this consolidation, it's so mentally draining. But yeah, that's another clean example of price reacting off of this zone. Right, let's go. I'll delete everything. I'll show you like a couple more examples. Let's go to the 1 hour, 3 hour. All right, so even though we are scalping, we still have to have an idea of where the higher time frames are going. So higher time frame, we have liquidity of the highs, right? We have equal highs resting over here, a bunch of touches, and we want to see price action make its way back up there. So we're gonna obviously find our points of interest being this 4-hour area right here, and then this area right over here. So we can still use those levels, but for scalping opportunities. It's not like we can't, right? We can still use those for scalp. Holy shit, look at that, big wick. Big wick, eh? But yeah, so now the market is consolidating at this point right over here. We haven't seen any bearish structure, so we're not taking a sell, but boom, we have that break of structure. BOS down. At this point, we have our points of interest being one over here and the second one right over here. Let's see what the market does if it respects one of these levels. Okay, in this case, it did not respect our levels. Perfectly fine, right? It's all part of the game. Risk management keeps us in long term. But yeah, you guys get the overall idea how to scalp with this. It's basically the same thing as the smaller time frames, or sorry, the same thing as the higher time frames, but just doing it on the implementing and doing the same thing on the smaller time frames, right? So let's play this out. Price comes into a higher time frame POI. At this point, you can start looking for your scalping opportunities. On the 3-minute time frame, price kind of breaks structure, comes back, taps in perfectly to this institutional candle, right? Put our stop loss at the high, take profit just the next low over here, and then price, you know, fills in your TP for about 25 pips with a 4 pip stop, or you could target the next low over here depending on what you do. But boom, now let's look for opportunities for the buys back up. We do see some consolidation. The market breaks structure, breaks the structure, creates liquidity, creates that liquidity, right? So right over here, we're expecting that money to get taken out. Liquidity cleared at the lows. We have that. This is our last move up that broke structure towards the left. So really, I would be looking to enter on this last institutional down candle before the move up. Price comes in perfectly, taps us in, stop loss at the low, TP just at the next high, right over here. It's that simple. Now I'll show you guys a live example on gold. I caught this on this one on gold a while ago. I'll show you guys the before and the after in the thing below. I think it was on the 1-minute time frame, not too sure. Yeah, it was right here. So gold was right over here, right? It was right over here at the time. I seen price goes down and break structure. Boom, we have that BOS down, break of structure. Price came to this point and broke structure. In my head, I'm thinking, okay, because price came in here once and expanded down a lot and started breaking previous higher low, higher high structure, and now bear structure is coming in, I'll take a short as soon as price comes back into this level. And that's exactly what I did. I'll show you guys the before just now, right? This is the before, or this is my entry, not the before. 6 pip stop loss with a nice 48 pip TP, right? So look at that, look how clean that is. You're risking 6 pips to make 48 pips, which is crazy, right? Or I think that's 48. Yeah, that's 48 with the 6 pip. So that's crazy, right? That's literally how scalping, generally how it works. And look at this, even though you caught that sell back down, you could have easily caught that buy back up, because look at this. You caught that sell, now look. Structure is moving bearish, right? Structure is moving bearish, but look at this. The market breaks structure right over here. It breaks structure right over here, right? It breaks a ton of structure, but let's stick to this one. This is the biggest expansion move up. This is where the market started its expansion, and then this is where the market started its second expansion. Back up to here. At this point, we have 2 areas of focus we can focus on. We can focus on buying over here, or we can focus on buying over here. Now, obviously, we'd be focusing on this, you know, this area in this case right now, because this is, you know, the beginning of that move up. And this is what happened. Price perfectly taps us in to our level of interest. Stop loss at the low, TP just the next high. Look at that. That's 48 pips met right there, caught right there. And then it continued going up for even higher, just for about this much. Price literally continued going up. Now let's see if you can catch a sell right over here. Because remember, scalping, it can get really annoying. It can get really, really annoying. I hate scalping. So I don't see any... well, I see one now right here. So look at this. The market created a high, higher low, higher high. The market ends up breaking past this previous higher low, and what did it do? Well, it tapped in perfectly to this expansion that was the cause of that break of structure. Right here, price tapped us in, stop loss just at the high, and then TP just the next low. Now in this case, your TP didn't get hit quite yet, but 9 out of 10 times gold would have smacked your take profit right over here. Soon it will, right, as soon as market opens, because it has imbalance over here that the market needs to come back and fill. So it makes a lot of sense. So generally the rules of when it comes to scalping is the same, but you just have to really keep an eye out for structure, right? So for example, like right here, the market pushes up, breaks a ton of structure right here, right? You could have easily caught that scalp, caught that nice scalp back up right here. I think you would, yeah, you would have got stopped out definitely with this move. So it does get a little bit annoying, but if you did do it from like, let's go back to the 5 minute. Let's go to the 3 minute actually. It all depends on how you draw up your institutional candle. If you did do it from the 3 minute time frame wise, you would have got filled into the pip right over here. Price would have tapped you in. Let's go back right here. Stop loss at the low, and then TP either the next high, like I do it, or you could target the next institutional candle right here. But in this case, if you did that, you would have either got stopped out at break even, or you just got stopped out, right? And ICT himself says that don't go for these crazy take profits when you're scalping. Try to make 10 pips every single day. If you can make 10 pips every single day, you'll be extremely you know, confident in your shit. Now look at this right over here. This is the cause of this major move down right here. This is that last institutional candle that was the cause of that major move down right here. Look how perfectly price taps into that institutional candle, literally to the pip. If we adjust this a little bit down to like this, taps in perfectly into that zone right over here, and then just target the next low right here, or target the next low over here, depending on how you want to scalp it, right? But generally the rules are the same. If I'm on the 1 hour time frame, I seen that this is that last institutional up candle before the major move down that broke structure. All I'm doing now is waiting for price to come back into that level, and I'm taking small scalps. I'm taking shorts from here to here, here to here. And remember, because you're taking shorts, you can use bigger lot sizes. Because this is a small little, you know, 3.5 pips, I can use with a $200 account, I can use a 1 lot. Okay, no, that's a cap. I can't use a 1 lot, but with a 1K account, I can easily use a 1 lot and still be risking about 1% of my account, or 1.5%, and going for crazy targets like 6%, 7%. And that's why I like scalping, but it gets really stressful. And I'll show you guys why. On GBP USD, like we said, we were looking to buy, or we were scalping over here. We're looking scalping over here, scalping over here, right? And we took some scalps over here as well. I took a buy on GBP USD from the lows. I forget where, but somewhere from the lows, and I had one position. I just let it run. Now scalping, you're buying, selling, you're buying, selling. That's something I myself cannot do. It's too mentally draining for me. I cannot do it. But that's generally how you scalp. And I'll show you guys a quick another little theoretical example. If the market on, you know, you're looking for buys on the 1 minute time frame, but the market is sells right now. But then boom, you see this right here. You see on the 1 minute time frame, price does that. Focus on that last institutional candle that was responsible for that break of structure. At that point, look for that retracement back down into your area of interest, and then catch the scalp. Either target the next high, which would be right over here, or target the next significant high, which would be right there. And for a sell side example, it's the same exact thing. Market is overall bullish, so we're not looking for buys, or we're not looking for sells, but then boom, price breaks structure. At this point, you could focus on that that level that was the break, that was the cause of that break of structure. And then at that point, you would expect price to come back up into this level and then take that short back down. Now you can easily scalp on the higher time frames as well. That's, some people think that you can only use the smaller time frames to scalp. No, that's not true. For example, right over here, we have this clean institutional down candle before the move up. Simply wait for price to come into here. As soon as it comes into there, look for a little confirmation and buy. It's that simple. Just buy it back up. And you wouldn't have even waited that long for this trade if price was like over here. It would have taken a day. And just target just the next high, and then boom, look at that. Price perfectly taps in 108 pips, 27 pips stop loss, and you know, you do your thing. So generally, that's how you scalp on the intraday time frames. I hope this video was helpful and easy to follow. But anyways, I'll see you guys in the next one. Peace.